All right, welcome to the Gamma Brief. I'm your host, Alex. If you're new here, the Gamma Brief is an experiment on using a layered generative AI pipeline to reliably capture market data, economic events, and structural mechanics, and then turn all of that into accurate, actionable briefings every morning, every evening, and every weekend. No fluff, no vibes, just regime-aware intelligence built by machines and delivered by me. If you've got ideas on how to make this better, what's working, what's not, drop them in the comments. Constructive feedback is fuel for this experiment. As always, this is market intelligence, not financial advice. All right, let's get into it. Wednesday, March 4th, 6:45 a.m. Eastern, ES futures are trading at 68.39, holding a fragile overnight bounce. A massive stimulus injection from China is currently fighting a negative gamma regime that wants to accelerate downside momentum. Yesterday's geopolitical shock proved how thin the liquidity is, and with the VIX still pinned above 23, the market remains structurally broken. If we lose the 68.19 pivot this morning, the floor drops out. Let's look at the mechanics. Regime assessment. We remain in a negative gamma environment. The VIX is at 23.05, signaling significant fear premium and continued expansion. In this configuration, dealers are net short options. Mechanically, this means they must sell into weakness and buy into strength to hedge their books. They are not providing liquidity, they are chasing price. This amplifies volatility and turns small moves into trend days. We are far from the flip line, so expect momentum, not mean reversion. Here are your critical pivots. Our equilibrium is fragile. The put wall stands at 6,800, which is the primary trapdoor below us. If dealers are forced to hedge below 6,800, selling pressure intensifies rapidly. Overhead, the call wall is distant, again at 7,000, leaving plenty of room for a squeeze if the narrative flips. The immediate intraday battleground is the neutral zone between 68.19 and 69.23. Watch S1 at 68.19 closely. Holding above this level keeps the recovery thesis alive. Breaking it invites a retest of the put wall. Overnight drivers. Two conflicting forces are shaping the pre-market. First, China announced a 2.5 trillion yuan fiscal stimulus package, worth roughly $350 billion. This triggered a reflex risk-on bid in Asia and Europe, pulling US futures up from the lows. Second, yields and the dollar have softened slightly, with the 10-year falling to 4.12%, providing a tailwind for tech. However, despite these bullish inputs, ES has struggled to reclaim yesterday's breakdown levels, suggesting domestic structural weakness is overpowering imported optimism. Risk radar. We have a data-heavy morning. At 8:15 a.m., ADP employment numbers hit, but the main event is the 10 a.m. Eastern with the ISM Services PMI. The negative gamma regime, the reaction to this data will be exaggerated. An asymmetric risk exists here. A hot print suggesting sticky inflation could shatter the fragile overnight recovery and send dealers short chasing back towards 6,800. A soft landing Goldilocks print is needed to sustain any rally. Be careful of the 10 a.m. volatility window. Strategic implications. Income strategies like iron condors are dangerous here. The market is not range bound and is coiling. Favor directional convexity. Debit spreads or defined risk vertical structures that benefit from expansion. If we break 68.19, the short gamma acceleration is the trade. If we hold and clear 68.65, chase the squeeze, but do not sell premium into this VIX. Bottom line, China provided the spark, but negative gamma provides the fuel. The bias is bearish below 68.19 and explosive above 68.65. The regime wants to move, position for the break or stay small. Levels set, bias defined, good luck out there. Want to follow the experiment? Subscribe. Want the full dashboard? Go to gexlog.com. Standard disclaimer applies. This is market intelligence, not financial advice. Derivatives are high risk. Always trade your own plan.